Hello and welcome to another session of the My Solo 401k Financial, My Community Daily Webinar Series. We're about to get started. We're excited today to discuss Mega Backdoor Roth Solo 401k at Schwab, made easy. So if you're on any of our channels, whether it's Instagram or YouTube or LinkedIn or X, if you subscribe and follow to us, you'll get the notification of when we go live. So you can come and ask questions and just hear the topics or content that we come to share every single day. So we go live twice a day, once in the morning at 10 a.m. Pacific, 1 p.m. Eastern. Then we come back in the afternoon at 1 p.m. Pacific, 4 p.m. Eastern. So if you have any questions or topics, whether on this topic or a different topic, please don't hesitate to chat it over. As always, the presentation is presented for educational purposes only. It should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So let's start out with basics as far as solo 401k eligibility. A solo 401k is for a self-employed individual. So you need to be self-employed with no non-owner, non-spouse, full-time W-2 employees. So think like an independent contractor, a solo practicing professional like a CPA or an attorney or a realtor. The key is that you report earned self-employment income on your taxes. So that could be, for example, on Schedule C, if your business is taxed as a sole proprietorship, W-2 wages, if your business is taxed, for example, as an S Corp, or a C Corp, or income reported on a K1, line 14 of a K1, in the case of someone whose business is taxed as a partnership. There's no need to have a formal legal entity. For example, we do have many individuals who operate as a sole proprietor without a formal legal entity. Ultimately, the key is that you have that earned self-employment income with no non-owner, non-spouse, full-time W-2 employees. Now, your spouse or business partner can participate as long as your spouse or business partner is reporting their own earned self-employment income, such as their own Schedule C or their own W-2 or their own line 14 K1 income. You can have a solo 401k even if you have a W-2 job, a day job, even if you participate in your W-2 employer sponsor plan, as long as you've got that separate earned self-employment income. Now, one of the top use cases for our customers is the ability to make Mega Backdoor Roth Solo 401k contributions. So in order to be able to make Mega Backdoor Roth Solo 401k contributions, you first need to be eligible, right? So that means, again, self-employed with no full-time W-2 employees. You need to find a provider like us that offers a plan that allows for Mega Backdoor Roth Solo 401k contributions. So Mega Backdoor Roth Solo 401k contributions is really a marketing term. So when one is making Mega Backdoor Roth Solo 401k contributions, what they're really doing is making what they call voluntary after-tax contributions, step one, and then step two, processing an in-service distribution, either transferring the voluntary after-tax Solo 401k funds to a Roth Solo 401k or transferring them out of the plan to a Roth IRA. So you need to have a plan like ours that allows for those types of contributions and then an in-service distribution. Of course, it's also going to be important to find a provider like us that has deep experience with making Mega Backdoor Roth Solo 401k contributions, as well as helping customers through the technical compliance steps. So for example, when you make a voluntary after-tax contribution, which is the first step, it needs to be deposited into a separate voluntary after-tax account. So we help our customers open up accounts at their bank or brokerage of choice, including helping them set up the required accounts. You also want to work with a provider like us that's going to provide the ongoing compliance support. So even though that first step, making the voluntary after-tax contribution, is not reportable on the personal or business tax return, The second step of moving the money from the after-tax account either to a Roth solo 401k or a Roth IRA, that is reportable on a Form 1099-R. And we handle that as an optional free service for our customers. So as long as they provide us the information in a timely fashion, we'll prepare that required 1099-R to report that after-tax to Roth transfer for no additional charge. Now, you can move the money from the voluntary after-tax solo 401k account to either the Roth solo 401k or Roth IRA. You can move it by check. You can move it electronically, assuming that the bank or brokerage where you have your solo 401k accounts will allow for that electronic transfer, which of course most would because it's staying inside the same institution. Now, one of the top brokerage choices is going to be Schwab. That's why we focus today on making mega backdoor Roth solo 401k contributions at Schwab easy. So here are the steps in a nutshell to make mega backdoor Roth solo 401k contributions at Schwab. Step one is going to be making those contributions. So you're going to need to have a separate brokerage account at Schwab that's specifically for your solo 401k provided by us that allows for the voluntary after-tax contributions. So as part of the onboarding process, we help our customers open up accounts at the bank or brokerage of choice. And if they tell us that they want to have the accounts at Schwab, we would draft the paperwork that Schwab requires. So we'll help you open up that Schwab brokerage account that's specifically dedicated and designated for your voluntary after-tax solo 401k funds. Then you're going to make the contribution, deposit the contribution to that same voluntary after-tax solo 401k sub-account. So that contribution can be made electronically, can be made by check. It can be transferred from the personal account or the business account. It's all acceptable from a solo 401k perspective. Ultimately, what's most important from a solo 401k perspective is that those voluntary after-tax solo 401k contributions are being made to a separate account that was opened up under the name and EIN number of the plan, which we help prepare the paperwork as part of the onboarding process. We obtain the EIN number that's specifically designated for the solo 401k. What's also most important from a solo 401k perspective is that the contributions are within the contribution limits and made by the contribution deadline. So we're answering questions every day from our customers in terms of how much they can contribute as a voluntary after-tax solo 401k contribution. So that's the first step, is making those contributions to the brokerage account at Schwab. The second step is going to be to convert, right? It's a two-step process. First, you make the contribution to the voluntary after-tax account. Then you transfer the voluntary after-tax solo 401k funds to either a Roth solo 401k, so an in-plan conversion, or out of the plan to a Roth IRA. And our plan documents support either. So it could be a second account at Schwab that's specifically for Roth solo 401k funds. And again, we would help prepare the paperwork to open up that second account. Or it could be out of the plan to a Roth IRA, including a Roth IRA at Schwab. So it could be a pre-existing Roth IRA that you already have, or you could open up a Roth IRA specifically for this purpose. Now, even though that first step of making those voluntary after-tax solo 401k contributions is not reportable on the personal or business tax return, the second step of moving the funds from the after-tax solo 401k account over to a Roth solo 401k or a Roth IRA, that does need to be reported on a Form 1099-R. And we handle that 1099-R as an optional free service for our customers. They just have to give us the information since we don't have access to the account. So there's a form that they can use 24/7 on our website. If you go to mysolo401k.net/forms, it'll take you right to the page. You'll see there's multiple forms that are accessed there. So for example, there's one form if you're transferring voluntary after-tax funds to a Roth solo 401k. There's another form if you're transferring voluntary after-tax solo 401k funds to a Roth IRA. So depending on where those after-tax funds are going, you want to choose the applicable form. So that's how we capture the information that's needed to prepare the 1099-R. And then we'll add your plan to the queue to issue that 1099-R. So it'll be issued for the year of the transfer. So if you're making contributions in 2025 and transferring them to the Roth Solo 401k or Roth IRA in 2025, then the 1099-R will be issued for 2025. So it'll be issued by February of 2026. So the question, it will often come down to, okay, how much can I contribute? So that's why we wanted to touch on those voluntary after-tax solo 401k contribution limits. So it's always going to depend on different factors. For example, it depends on your self-employment compensation. You can't save more than you earn. But the voluntary after-tax contribution limit is 100% of your compensations. You can contribute 100% dollar for dollar up to the overall limit. For example, $70,000 for 2025. Now, you still need to consider the overall limit. In other words, if you are making other types of contributions to the plan, whether employee or employer, the sum of those contributions cannot exceed the lesser of your self-employment compensation or the overall limit. It's also noteworthy that the voluntary after-tax contribution limit doesn't go up if you're age 50 or older. So you can make catch-up contributions to the solo 401k, but you wouldn't make that as a voluntary after-tax contribution. That would be made as an employee contribution directly to either the pre-tax solo 401k account or the Roth solo 401k sub account. It's also noteworthy that the voluntary after-tax contribution limit is at the plan level. In other words, it's not impacted by contributions made to another retirement plan, like a day job plan, with the one exception being the 403B exception. So if contributions are being made to a 403B, whether employee or employer, the sum of those 403B contributions, together with any contributions that the individual wants to make to the solo 401k, the aggregate, the sum of all those 403B plus solo 401k contributions cannot exceed the overall limit. So let's go through some contribution scenarios just to help paint that picture. So let's assume that we have a self-employed business that's taxed as an S corporation where the individual is under 50 years of age, who does not make contributions to another plan, and their goal is to be able to make Roth and or voluntary after-tax contributions. In other words, they're not interested in making pre-tax contributions. Let's also assume that they have $100,000 of W-2 wages from their self-employed business. So how much can they contribute to the solo 401k? So for example, for 2025, they're going to be able to contribute 100% of their wages dollar for dollar up to $23,500. They're not interested in making pre-tax contributions. So let's assume they just skip making employer contributions. And then they can contribute the difference up to $70,000, so another $46,500 as a voluntary after-tax contribution. That would need to go into a separate voluntary after-tax account, for example, at Schwab, and then could be moved over to the Roth Solo 401k account, also at Schwab. So at the end of the day, they've got $70,000 in their Roth Solo 401k brokerage account at Schwab. So before we talk about deadlines, if you're finding this to be helpful, please like on whatever platform you're on or share with others who might find it to be helpful. That helps us to get the word out to other solopreneurs, other self-employed individuals just like you. Whether you're on LinkedIn or YouTube or X or Instagram, if you like or share with others, we'd really appreciate that. Thank you so much. So when is the deadline to make contributions? Well, it depends on different factors. One is, when did you set up the plan? Another factor is, okay, what is your self-employed business tax return deadline? So let's talk about, for today, those who didn't set up the plan by the end of last year, so by December 31st, 2024, but they still want to be able to make 2024 contributions. So regardless of how your business is taxed, whether it's taxed as a sole prop or an S corp or a partnership or a C corp, if you filed an extension for your 2024 self-employed business tax return, even though you didn't set up the plan by the end of last year, you could still set up a plan here in 2025 and make 2024 either employer and or voluntary after-tax contributions for 2024 by the extended tax return deadline here in 2025. So that's the bottom row here, for example. So you didn't set up the plan until here in 2025, but you filed an extension for your 1040, for example, for 2024. In the case of a sole proprietor, that individual could still make employer and or voluntary after-tax contributions for 2024 by October 15th. And likewise, if your business is taxed as a partnership or an S corp and you hadn't set up the plan by the end of 2024, but you filed an extension for your 1120S or your 1065 for 2024, you could still make employer and or voluntary after-tax contributions for 2024 by September 15th of 2025. In other words, by that extended deadline. Finally, if your business is taxed as a C corp, but you didn't set up the plan by the end of last year, by December 31st, 2024, but you filed an extension for your 1120, if you filed a timely extension, you could still set up a plan and make either employer and or voluntary after-tax contributions for 2024 by October 15th of this year. All right, well, that takes us to the end of the slides that we wanted to share. We appreciate the chance to discuss these topics. Again, if you find it to be helpful, please like. To get notifications of when we go live, please subscribe on whatever platform you're checking us out on. And we do appreciate the chance again. So also, we want to highlight our community. We've got a community with over 30,000 members. We have vibrant forums. We have a library of videos and webinars. It's totally free to join. All are welcome. We also have the industry's first AI, which you're also welcome to use for free at solo401k.ai. It's a great way to find resources and answer questions quickly. So please don't hesitate. Thank you so much, everyone. All the best.